Hello students, so welcome to this particular session. So students, now all of you, are you all there students hearing? Just give the confirmation students. Chandana, good morning. Priyanka, good morning. All mark the attendance students and then we can just proceed with the session. Today would be an important lecture because we will be looking into some of the most critical areas that we have discussed. I have also discussed with all of you about the topics which I intend to cover in my today's session. Nishank, Pavan Kumar, Rahul, you were not there yesterday. Have you seen the last lecture? I'm good, Priyanka. Sorry. Sorry. So let's start the day session, students, then. Yeah, bit of cold. I've got a bit of cold. In fact, last night it's actually raining. The temperature here in Mumbai, because of the rains and all, I got stuck with this cold, but it's only cold, nothing beyond that. So not to worry. So students, let's start with the session. Trinad, good morning, students. Perfect. So let's start now, students. Yesterday we have done section 35. We have done section 35, and 35 I told you about the scientific research allowance. I had told you that this has to be split into two parts. Section 35 has to be split into two parts. Part A is about the donation. I gave you that example that I am a CA and I am in the practice. I can also get 35 deduction on the basis of the donation and the contribution that I will do, where I have to give the donation and the contribution. These donation and the contribution that I will do in these notified institution, in these particular notified institution. So that is what they have. That is what the situation arises in this particular context. Now, students, herein, if you just now pay attention to, I have told you one important point about the section number. Remember that I've told you that for other sections, other particular area, you need not remember the section number. You need not remember the section number, but only for this particular section, you will have to remember it, students. You will have to remember the section number. Please don't forget this. I've seen your past year paper of IPCC also, in which case these people have been asking directly the section numbers. Okay, so that's only one point which I thought of to again highlighting this particular part, that so far as the donations are concerned, do ensure that the section number is known to each one of all of you, which is about what, 3513 if it would be there, 100% reduction, 3512 it would be there, 150% reduction, 35288 if it would be there, then it would be 150%. Then it would be 150%. Archita, will live lectures for CA final DT be there? Final CA, Archita, we have already have done. You can just refer all the revisionary bank, or you may in fact, I have already given the WhatsApp number initially, so you can just connect once. I'll guide you across for the final CA lectures, which I have already have put across in our YouTube channels also. So you can just do me a WhatsApp. I'll just guide you further, and I'll explain you primarily how the things will be taken forward. I'll not be doing it right now because this is presently only for inter CA. For final CA, I'll just let you know in that particular communication. This was your part A. Now we come to part B, which is very important part, students. What is part B? Part B in our chart is about what? Is about the actual expenditure, students, which you have to. I have told you to go through the same. Priya, good morning. I've told you, Prasad, good morning. I have told you to go through the same part B. So I've given you certain examples also. If it isn't it, yesterday while I was discussing, I was giving you some examples also, that look, I am doing a manufacturing, I am doing a research, and in my manufacturing or in my business, when I'm engaging to do the research, then the expenditure, students, this expenditure is in the nature of the capital expenditure. See, revenue expenditure, we all are aware that the revenue expenditure is allowed as deduction to us as per the normal accounting principle. In your profit and loss account debit side, the revenue expenditure is debited, and thereafter your net profit is determined as per the accounting concept, and on that net profit, as per the accounting concept, you further do the adjustment which are there in the head PGBP from section 28 to section 43B. But the revenue expenditure, students, already is debited. But what about the capital expenditure? Capital expenditure, as far as the accounting is concerned, I told you yesterday also that it is not allowed as deduction. Capital expenditure is not allowed as deduction, isn't it? So therefore, in your accounting net profit, which is the base figure for the purpose of determining the PGBP under this particular head, in your accounting net profit, the capital expenditure is not debited, isn't it? At the most, what you will take, you will do a depreciation. You will debit a depreciation in respect of the asset that has been acquired. Okay, but so far as section, if it is relating to, if those capital expenditure is relating to, what? Relating to the scientific research purpose, then section 35 allows you the deduction, of these particular scientific research expenditure. And that exactly is the point, students. So therefore, you will take a deduction of section 35 about the capital expenditure which you have incurred for scientific research purpose. So always keep in mind this particular part in this context, students. Fine, students. Now then, all of you, quickly, 2 minutes time, I am giving it to you. Just read this particular part, 100% and 150%. Quickly. Read this particular part quickly, students. And I want you to take a note after this, but quickly first read this one out. Let's start, students. Section 35. This scientific research, part B. Unabsorbed depreciation part. Prasad, towards the end I'll explain your query. All of you take the notebook, students, now. Students, this is how the things will go. So let us take an example like a pharmaceutical company or any company which is there. So here, students, you do the research. You're doing a research activity, okay, and second one is the normal manufacturing, or I can say, or I'm doing business. Okay, so this is about what, say A Limited is a company. A Limited is a company, students. So what they are doing? They are doing research. Now in the research part, students, just be very careful about how the things has to be considered. Now there is a case of the section 35, or I'll say about the approved research under section 35 2AB, and the second category is other category. So particulars, I'll make a 3-column particulars, then there is an approved research under section 35 2AB, and then there is an other category. Now in the particular side here in, students, so when I'm talking about the approved research under section 35, there is 150%, students. There is a 150% deduction which is available, but make no mistake, not that in all the cases that you get 150%. Not that in all the cases you get 150%. You have to also be very careful of that particular point. So how do we proceed in this situation? It goes like this, students. Like capex, which is there, capital expenditure, or let me write here first. Before the commencement of business, if before the commencement of business the expenditure is incurred, if before the commencement of business the expenditure is incurred, which expenditure? Say capital expenditure. Say capital expenditure, if that is incurred, now except land, because land would not be allowed its deduction. You can write here in no deduction for land. Except land, primary students, capex, capital expenditure, will this be allowed as deduction? And the answer is yes, but only to the extent of 100%. 100% students. You will say, sir, but it is 35(2)(ab). In 35(2)(ab) also 100%. So students, be careful. If it is before the commencement of business, if it is before the commencement of business, then it is always what? Always 100%. If it is before the commencement of business, it is always 100%. Keep that in mind. Okay. The second one, students, here. In this case, so capex except the land, here revenue expenditure, students. In the revenue expenditure, what is allowed to you is the material, like for research, whatever is the material that you use, plus the salary. Okay, but salary to whom? To the scientist, the one who is doing the research, isn't it? So material plus the salary. So but salary will not include the perquisite. But salary at this stage, before the commencement of business, obviously it is logical. We are not sure whether you are going to do the business or not. We are not sure whether you are going to do the business or not. So therefore, we are not going to give you the deduction of salary. So material plus salary, but we are not going to give you the deduction of perquisite. Without no perquisite, but no perquisite. But no perquisite. How much? 100. Before the commencement, students, don't expect moon. Before the commencement of business, don't expect moon. You will be disappointed. Are you all through, students? Then we can go to post commencement of business. After the business is commenced, students. Chandima, be very careful now, Nishank. After the business is commenced, what happens then? So here, students, once the business is commenced, then capex, be careful now. Capex, now what is a capex? I'll just write everything: land, building and plant. Fine, students. Land, nothing, forget it. Forget for land. Building, even if it is 35(2)(ab), students, even if it is 35(2)(ab), it will be 100%. How about the plant? For plant, it is, students, 150%. If it is to do with 35(2)(ab) approved cases. 35(2)(ab) approved cases. And that's exactly how it has to be considered. So this is for the capital expenditure. Thereafter what? Thereafter, if you talk about the revenue expenditure, now revenue expenditure, we don't make any distinction. Any revenue expenditure for scientific research that you are incurring, this is 150% and this is 100%. This is 150% and this is 100%. Okay, so this is how you will try to get the deduction, students. So this is your total amount. Deduction under section 35. Or this. Why I have said or? Because it depends on what? You are in the 35 to AB category or you are in the other than 35 to AB category. So it all depends upon in which category that you belong to. Did you all got this one, students? Now, shall I close this one by putting the numbers or the chart which I have prepared? See, you can expect this in the MCQ also, and also in the total income competition also you can expect this kind of a question. In MCQ also, you may expect it. All of you have copied on this one? Now, be careful. If you are through with this, and all of you have copied it, this one. Students, in the manufacturing business, primarily, I'll calculate the PGP will be calculated, net profit, as per books. Then add and less PGBP adjustment, add and less all the PGBP adjustment. Then students, whatever you arrive at here, then from this you will minus what? The deduction under section 35. Which is from where you got this deduction under section 35? This is the deduction under section 35. The deduction under section 35. This final number which I have already have done the totaling. And once you get this deduction under section 35, you will get finally what? PGBP. You will get PGBP. Fine, students. This is the way you will calculate the PGBP involving the deduction under section 35. What sort of deduction of section 35 is? This is a deduction when you are incurring the scientific research expenditure. Please don't get again confused with part A. Part A was all about, you remember part A with my story. My story was what? I am a CA in practice and then I am giving a donation to IIT. That is the story that you should remember for part A. Okay, and the other, obviously, you have to remember the section which I have told you so as to remember what percentage to be applied, but just remember this thing. And part B is for whom? For one who is engaged in the business. The manufacturing business is what they are doing. And in respect of that manufacturing business, that the expenditure that you have incurred, for that expenditure, that the deduction would be given in this particular manner. Did you all got this one, students, now? All of you? Okay. Now the question is, students, now the question is about what? That, sir, if supposingly this deduction is not, say for example, students, here this is just putting a numbers to it. Say this is 20 and say this is 30. So there is an unabsorbed portion. There is the unabsorbed portion, isn't it? If the number is here 20 and this is 30, then obviously there would be an unabsorbed portion of 10. So what is the treatment of the unabsorbed portion of the deduction of the capital expenditure under section 35? What is the treatment of the unabsorbed portion of the deduction of the capital expenditure under section 35? So the right to treatment, I am dictating here to all of you. Treatment of the unabsorbed portion of capital expenditure. Unabsorbed portion of the capital expenditure on scientific research. Now here, students, the treatment is at par. At par means equal, at par with that of the treatment of the unabsorbed depreciation under section 32.2. Now this was the query which Prasad has also asked about the concept of UAD. I'll explain that concept now with this particular thing. Yes, Pawan Kumar, Chandana, Priyanka, all of you will first copy it on this, what I have made you write, and then first I'll explain you the concept of the UAD, students. How the UAD arises and what would be the treatment of the UAD. Okay, all of you have copied on this. Let me know, then I'll first explain the concept of UAD, and therefore you can easily then understand the concept of the unabsorbed capital expenditure on the scientific research. If you all are through up till here, do let me know. Fine. Now, concept of the UAD. Students, this is a tax P&L. Say for example your tax P&L, debit, credit. So your sales is 100. Your sales is 100. To all other expenses debited is say 120. Depreciation under section 32, it is say 20, isn't it? Now what happens, students? There is a negative 40. So this negative 40 has to be analyzed. How we are supposed to do in this regard, students? So the sales first would be adjusted from the other expenditure, and if still there is a surplus, then the surplus would be any surplus which is left after adjustment. So the adjustment first would be done, students. The adjustment first will be done from what? From the other expenses first, and if there is still a surplus, then it will go to the depreciation. That is the method in which you do the set off. Now in this case, obviously there is no surplus. In fact, your other expenditure also could not be fully be adjusted. Your other expenditure also could not be fully be adjusted, and therefore, students, therefore what? Therefore we will say herein what would be the treatment. The first one is about that there is a business loss of 20, and the second one, students, is about the unabsorbed depreciation under section 32.2, under section 32 of how much? 20. Okay, now what will be the situation, students? Herein this will be carry forward. There is a carry forward up to 8 years, and here, students, the carry forward is for unlimited period. This is the reason why, students, this is the reason why we have to split between what? We have to split between the business loss and the unabsorbed depreciation. We have to split between the business loss and the unabsorbed depreciation. That is the reason why we do the splitting part. This is the reason why we do the splitting part, students. Did you all got this one? All of you? Prasad? And first of all, happy Onam to all of you students. Onam festival is being celebrated. Fine, students. So this is how you are supposed to deal with it. Fine, this is how you are supposed to all deal with this. I hope that this point is very clear now to all of you. And with this we can proceed further. Fine, students. Okay. So what is the treatment then when I have written here for unabsorbed capital expenditure, students? For unabsorbed capital expenditure on the scientific research, if the treatment is at par with that of UAD, if the treatment is at par with that of UAD, what does it imply? What does it imply? It implies that it can be carried forward for unlimited period. It can be carried forward for unlimited period is what would be the implication. Is what would be the implication. Did you all got this one now? So here we can say, therefore, carry forward for unlimited period. Carry forward for unlimited period. I hope that now you have got hold with this concept. We can now proceed further quickly. Let's start. So 35 students is all done. I'll see if there are some questions in your module or not. Let us have a look quickly. Okay, there is one concept which is still to be done. First I'll do that concept and then we will start with this. Otherwise, last concept, students. The last concept. You will also take a note here itself rather than in chart. I'll just make you write quickly. The capital expenditure, the asset, you can write like this, the asset used for scientific research on which deduction under section 35 is claimed subsequently the asset is transferred to the business division or the asset is sold outside without using for business division. All of you will copy on this quickly. Venkateshwar, at the start of my lecture, I've given you the WhatsApp number, so please connect through WhatsApp in the afternoon and I'll guide you. If you're all through with this one, students, do let me know. So students, here now the asset will enter because it is going to be used for the purpose of business. Because it is going to be used for the purpose of business, the asset is going to enter into the block. The asset is going to enter into the block, isn't it? And if the asset enters into the block, at what value it will enter into the block? If the asset enters into the block, then at what value the asset will enter into the block? In this case, asset shall enter into the block at nil value, students. At nil value. In fact, this is what yesterday we have discussed. Some for actual cost, when I was discussing with you, actual cost which I was discussing with you, this was covered in explanation number 1 to section 431. This was covered in explanation number 1 to section 431. I have circled 4 or 5 things only. In one of the circle, students, it is all about this one only. In one of the circle, this is all about this particular point. So the asset shall enter into the block at nil value. Explanation 1 to section 431. Fine, students. Second part is about the asset is sold without using for the purpose of business. Now, students, if you can recall our discussion when I was having with you, remember the SLM category of depreciation? In that also, I taught you that if that asset on which the depreciation was claimed on the SLM basis is subsequently sold, then the surplus to the extent of the deduction claimed earlier, will be charged under the head PGBP, and only the excess over and above the surplus will go under the head capital gains. This is what we have learned, isn't it? The surplus to the extent of the deduction allowed earlier, that is what will be charged under the head PGBP, and the excess over and above the deduction, that will be charged under the head capital gains. That we have learnt in that MCQ type of question I have given it to you, isn't it? 2 or 3 combinations. One was the terminal depreciation, one was the surplus. So for the surplus, we have said that to the extent of the deduction, whatever is the surplus, to the extent of the deduction, we have said that will be charged under that PGBP. So here also, students, what would be the situation? Like say the cost of say plant is 100. Okay, deduction under section 35 at 100% is 100. Okay, now WDV value has become nil. Now sold for point number A 60, point number B 120. So what is the treatment in this case? You get me the answer for A, what is the answer, and for B, what is the answer. I want your answers in A and B. Quickly, students, get me your answer. For A, what will be the answer, and for B, what will be the answer? Quickly. Say fast, quickly. Priyanka. No, there is no loss. How come there is a loss? The WDV has already become nil. You got a full deduction, isn't it? And because you got a full deduction, the WDV has become nil. And if the WDV has become nil, thereafter you are doing a sale. So 60 is getting compared with nil value. 60 is getting compared with what? Nil value. And therefore, whatever is 60 is your gain in point A. But my question is, under which head that 60 will go? That is why question. Similarly, in point B, in point B, 120 is the gain. Why? Selling price 120 less what is the cost? Cost after deduction has become nil. So 120 will become the gain. So accordingly the question is, this 120 will go under which head? This 120 will go under which head? Yes, Ajay. Chandana. I want including the numbers, students. Trinath. Yes, Trinath. Arvind. Nishank. Priyanka. Chandana. Priya. So first case, students, you have taken deduction. We all know deduction was at 100. So whatever the surplus herein, the surplus here would be, the calculation of surplus would be like selling price 60 minus the cost, because there is a full deduction. Because there is a full deduction, the cost will become nil. So therefore, the surplus 60. So this is a surplus. Okay, 60. Deduction allowed earlier. Under section 35 was 100. Therefore what? Therefore, the entire surplus would be charged under PGP. In point B, surplus selling price 120 less cost, full deduction. So cost has become nil. So surplus is 120. So deduction allowed earlier. $100. Therefore, up to rupees 100, charge would be under PGBP. Therefore, up to rupees 100, charge would be under PGBP, and excess rupees 20 the charge would be under capital gains. Excess rupees 20, the charge would be under capital gains. Ben, yes Ben, perfect. So I hope that students, now all of you are clear with this point. All of you are clear on this particular proposition. Fine, students. Now with this one, now let's see if there are any questions which are there in this context. I don't think there is any question, but I think 35 AD I have selected a question which 35 AD students, your module has got a very good question which I also do it in CA final. Inter question students, I am also doing it in final CA because that question is really very good. Let's have a look first. Is there any question? I think this is about donation. This is the question which is there, students. This is all about the donation. So that donation part, directly you can refer to this question. No, this is a good question because this is about a donation plus scientific research. This illustration number 8 is about donation plus the research plus the scientific research. This is there in your module students 4.229 for donation, which was your part A, and scientific research, which is your part B. Let's quickly run through this. Mr. A furnishes the following particulars for previous year 1920. Compute the deduction allowable under section 35 for AY 2021 while computing his income under the head PGBP. Amount paid to the notified approved Indian Institute of Science Bangalore for scientific research. So if they are giving you this directly, the IIT or Indian approved Indian Institute of Science, then that is fine. But I told you also, I've seen some of the questions wherein they are not telling you IIT and all. What they are saying, deduction amount which is contributed to the institute eligible for deduction under section 35 2AA. Like that, they have given sometimes the adjustment, and that is why I requested to you, all of you, to at least remember what this 35 2AA, what exactly it implies, what do you find in 35 2AA, so on and so forth. So here, students, if they are giving you directly, so this is 150%, this is again 150% donation. Thereafter, this particular amount paid to X Limited, a company registered in India which has a main object of scientific research and development as it is approved by the prescribed authority. Student, this is under 35 1(2)(a) which would be 100%. Which would be 100%. So 4 lakhs would be the amount over here. Thereafter, expenditure incurred in-house. So this is all about your part A, and now this is about your part B. So it is approved in this regard, friends. In this context, expenditure incurred on in-house research and development facility as approved by the prescribed authority. Students, you should always find that they should mention you 35. If for this would be the normal 35, others. For for the 35(2)(ab, they should write that eligible for deduction under 35(2)(ab. This is how you have to read the question in the exam. Because see, all the scientific research is approved. But if it is approved under 35(2)(ab, that is what I have written to you. Approved under 35(2)(ab. So if it is approved under 35(2)(ab, so they should make a mention categorically approved under 35(2)(ab. Then that 150% you will get it. Otherwise, if it is only written in the question approved, what will be the situation? Then you go with the normal particular take of revenue expenditure on scientific research of 3 lakhs and capex. In that capex, students, cost of land would be eliminated. Land in any case will never ever be allowed as deduction. So therefore, only up to rupees 2.5 lakhs, 100% deduction would be given. So this was one question which is which you should try to deal with it once. Okay. Now with this one, students, now we come to section 35 AD. Let's come to section 35 AD. This is one question which covers up everything. We all now come to 35 AD. For this, students, you will take across in your chart. Again, students, you will find here the deduction is in respect of. Deduction is in respect of. Is in respect of what? Is in respect of a capital expenditure, students. Is in respect of capital expenditure. So in this context, if you see, the deduction is in respect of the capital expenditure. But that capital expenditure should be in relation to a specified business. That capital expenditure should be in relation to what? A specified business. Which are the specified business? There is a list, students. Can you see over here? There is a list here which has been given. You will say, sir, where is the list? So students, this is the list. This is your list of the expenditure. Don't have to by heart it, just you have to go through the same. Like cold chain facilities, they are the specified business. Warehousing facility, all these are specified business. Building and operating hospitals with minimum 100 beds. Housing project under the affordable. So whatever is the priority, students, whatever is the priority eligible sector, whatever is the priority eligible sector, those are the ones which has been categorically has to be covered. Priority. So the government has made a list of all the priority eligible infrastructure related projects. For those specified or priority infrastructure related projects that they have been made as a specified business, and in respect of these specified business, the deduction will be so deduction in respect of their capital expenditure incurred in these specified business will be allowed as deduction under 35 AD if it satisfies certain conditions. So first is the list of the specified business. So affordable housing scheme, production of fertilizers in India, developing or maintaining and operating and developing new infra facility like road, highways, etc. If I as an entity is engaged in the developing and maintaining the road and highways in India, that is my business. Okay, so therefore in that case my business would be considered as an eligible business, and in respect of my business, whatever is the capital expenditure that I will incur, whatever is the eligible capital expenditure which I will incur, I will get as per 35 AD a full deduction of that capital expenditure. Cross country natural gas or crude or petroleum oil pipeline set up and operate of inland, all these are examples. Now this is also important, students. Hotel, building and operating minimum 2-star hotel in India. So minimum 2-star. So you will not give yourself 2-star. I feel that it's a 2-star hotel. So the relevant authority will decide the star category of your hotel. Okay, so 2-star, 3-star, 4-star, 5-star, 7-star. So therefore they will decide the star category of the hotel, but minimum level has to be 2-star. Okay, so that is one thing you should always keep in mind. Then the slum redevelopment projects, many particular cities having a slums, therein lot of redevelopment projects are being done. So if anyone who is engaged in the slum redevelopment project, then this would be considered as a specified business, and in respect of this specified business, whatever is the capital expenditure that you have incurred, that capital expenditure will qualify for a full deduction. Okay, 35AD will give you a full deduction of a capex. Beekeeping or warehousing for the storage of the sugar. So warehousing activity, students. So warehousing of both agricultural produce as well as warehousing of what? Of the sugar. Both of them, students, will qualify for the eligible 35. So both of them are the specified business, and hence the capital expenditure which I've incurred, in respect of such specified business will be eligible for the purpose of deduction. Slurry pipeline and thereafter the semiconductor water fabrication manufacturing unit. So all of them are also eligible for this thing. They are considered as a specified business. Now some more conditions, students, in this regard. Let's have a look for some more conditions which are being given to you in this context. If you see herein, deduction would be pre-commencement, just like the way we have got just now. We have done for 35 also. Before the commencement of business, if I have incurred the expenditure, then what will be the treatment? Similarly over here also, before the commencement of business, specified business, like hotel and all. Like first of all, I'll do the construction of the hotel. I'm incurring the capital expenditure, and thereafter the hotel business will start, isn't it? So therefore, before the commencement of business, I have already incurred the capital expenditure. Then what to do about that capital expenditure? So what they have said, if those expenditures are capitalized in the books of accounts, if those expenditure has been capitalized in your books of accounts, then in the year in which you will commence that particular business, in the year in which, students, you will commence that particular specified business, in that year you will take the entire deduction of the capital expenditure. You will take what? The entire deduction of the capital expenditure. But if it is about the post-commencement expenditure, so for post-commencement expenditure would be allowed in the year of the incurrence, the year in which you have incurred, the expenditure, that would be the categorical year. Okay, so obviously the business is already commenced, and will I be incurring the capital expenditure? Why not? You may be purchasing the plant or the other assets, so you will be doing all that. And if you are doing all that, then whatever the expenditure that you are now incurring, at that time you will claim a full deduction of these capital expenditure under section 35AD. Now if you can see herein, now you tell me, students, if you have taken the deduction of the capital expenditure under section 35AD, if you have taken the deduction of the capital expenditure under section 35AD, can you claim again the depreciation under section 32 in respect of that capital expenditure? Can you claim again the depreciation under section 32 in respect of that capital expenditure? Can you do that? Is it possible? Is it possible to claim a depreciation of that particular capital expenditure that you have incurred? To that, definitely the answer is no. Because obviously, as you all are suggesting, students, it will be leading to a double deduction. It will be leading to what? A double deduction. And because it will be leading to a double deduction, the question of claiming the depreciation allowance will not arise. The question of claiming the depreciation allowance will not arise. So just forget that. Now, what are the ineligible, students? Just the way in 35, there was only one ineligible capital expenditure. In section 35, students, there was only one ineligible capital expenditure. Here, there are in all 3 ineligible capital expenditure. Here, in all, there is 3 ineligible capital expenditure, and they are land, goodwill, and the financial instrument. Land, goodwill, and the financial instrument. So not only it is about the land, but also about the goodwill as well as the financial instrument, which will be considered as an ineligible, capital expenditure, and on that you will not be allowed the deduction. Now, students, if you remember, we have seen even in the case of actual cost, while we were discussing that depreciation concept, whatever If students I have paid, if I have paid what? I have paid for the asset in cash in excess of rupees 10,000 on a single day, then students that will not form part of, be careful, that will not form part of my actual cost of that particular asset. And because it will not form part of my actual cost of that particular asset, whether I will be eligible to claim the deduction in respect of the expenditure, and the answer is no. If I am making the payment in cash in excess of rupees 10,000 on a single day, then that amount which I have paid will not form part of my actual cost. And if it doesn't form part of my actual cost, then you will not be allowed the deduction of that particular expenditure that you have paid for in cash. So that is what they are trying to say, students, over here. As per the proviso to section 43(1), payment made for the expenditure of the capital nature otherwise than by way of an account pay check or any other electronic mode as may be prescribed in excess of rupees 10,000 on a single day, you will not be getting the deduction. So for this particular part, herein it would be ineligible and therefore no deduction. No deduction of the sum so paid. Of the sum so paid. No deduction of the sum so paid. Fine, students. Now be careful. Time limit is 8 years. So students, this is a lock-in period. What is your lock-in period? Lock-in period is 8 years. Now students, supposingly I have purchased it for my hotel industry. Okay, I have purchased it for what, students? For my hotel industry. And thereafter what? Thereafter I am using, for after some time, I have taken the deduction also. Students, I have taken the deduction also under section 35 AD. I have also taken the deduction under section 35 AD. And thereafter, say maybe after 2 years, I have shifted that particular plant on which I have already taken the deduction under section 35 AD. I have shifted that particular plant. Where did I shift that particular plant? Say in my manufacturing division. I, as a company, is engaged in manufacturing business, and also I've got a hotel. Manufacturing business is not a specified business. Hotel business is a specified business. So what I have done is, after claiming the deduction of that capital expenditure which I have incurred for my hotel business, thereafter, after say 2 years, I am using it for what purpose? For non-specified business purpose. For non-specified business purpose. Therefore, the question is, what will be the consequence of this default? Is this a default? Yes, this is a default. Why do you say that this is a default? Because the time limit, can you see the lock-in period? The lock-in period is for a period of 8 years. And here you have transferred it within the period of 2 years. So the fact that this would be considered as a default. And if there is a default, there is always a consequence. And the consequence here would be two things, students. Your deduction of 35 AD will be taken away. But if they are taking away the deduction of 35 AD, they also recognize, students, of the fact that not the entire deduction. See herein, amount allowed as deduction would be a deemed income. That is, whatever you have taken the deduction, that deduction is getting taken away from you, and therefore it is being treated as a deemed income. But be careful, students. Be careful on what? On the fact that whatever was a depreciation, which, if supposingly, students, you would not have taken, if you would not have taken a full deduction of 35 AD, if you would not have taken a full deduction of section 35 AD, would have got the depreciation for that particular asset which you have been using it for that 2 years period? And the answer is yes. And the answer is yes. Because if I would not have taken a 35 AD deduction, I would have taken the depreciation. That is the reason why just now, some time back, I asked you this question, that if I have taken the full deduction of 35 AD, then will I take depreciation allowance? No. But if I would not have taken the deduction of 35 AD, could I take the depreciation allowance? Yes. So now when you are taking away the 3580 deduction, because the assessee is using for other than specified business purpose, then I will be taking away his deduction of 3580. But by taking away the deduction of 3580, the fact that for that 2 years period, if he would not have got the deduction of 3580, if for that 2 years period, if he would not have got the deduction of section 3580, will he be getting the depreciation allowance? Yes, he would have got the depreciation allowance. Then that amount, that notional depreciation allowance, students, will be reduced. So what I'm reducing here, students, is the notional depreciation allowance. So this is nothing but the notional. Notional depreciation allowance on such asset is allowable. And that's exactly how it happens. Now this asset will enter into the block. Now I'm using it after 2 years. What I have told you, that now I'm using this asset for what? Asset for my manufacturing business. So obviously, because it is going to be used for my manufacturing business, now the asset will be entering into the block of asset. Now the asset would be entering into the block of asset. Question therefore is, at what value? At what value? So whatever you made as a deemed income, that would be the cost. That will be the cost at which the asset will enter into the block. It is just like the concept I have taught you just now, some time back. I have given you this concept, and the concept was here, which we have just discussed. Here, if asset shall enter into the block when I have got a full deduction, students. Asset is 35. I am talking about the scientific research asset. Now asset is transferred to the business division. Now for scientific research division, students, for scientific research asset, do we have any lock-in period? That for this many years you need to use it, otherwise there will be a deemed income, or I will take away your deduction. There is no such thing. Even though you are using for 2 years, nothing happening. No deemed income will arise. Meaning thereby your deduction is intact. Okay, now the deduction is intact. Yes, the deduction is intact. So on the sale of this particular asset, on the sale, students, of these particular asset, at that particular point of time, the sale of the asset will enter into the, not sale, on the transfer of the asset to what? To the business division, maybe even after 2 years. Was my deduction was intact? Yes, my deduction was intact. So therefore nothing was taken away from you. So therefore in this case the asset will enter into the block. At nil value, because full deduction has already been allowed. Because now if I have some value of that asset, then it will result into a double deduction. First under 35, and now with depreciation allowance, isn't it? That will be double deduction. But what about now 3580? 8 years is lock-in period. So in 2 years, if I am taking it out, then there is a deemed income. Why deemed income? Because your deduction will be taken away. And if the deduction is taken away, to the extent it became the income, that value will now enter into the block. And now in the block, you will arrive at, in the form of depreciation, you will get the depreciation allowance. So here, students, the comparison of 35 and 3580 should be done from this perspective, that 35 asset, there is no lock-in period to be used for scientific research purpose. So even after 2 years, when I shift my asset to what? To my business division, still I get a full deduction. When I shift my asset to the business division, still I'm getting a full deduction. No deemed income is there, and that is the reason why your asset will enter into the block at nil value. But in the case of 3580, if you don't use it for that 8 years period and you use it for any other purpose, then your deduction will be taken away. And if the deduction is taken away, now whether you will be eligible to claim the depreciation, and the answer is yes. And hence there is a value at which you will enter that asset which was earlier used for specified business, there would be a value that will enter into the block, and on that value you will claim the depreciation. And how to calculate the value, I have already told you about section 35 AD. Did you all got this one, students? So this is how it has to be considered. Now there's one last point, students, which is about the loss. There is one last point which is there in respect of the loss. The loss of the specified business, students. This is a very typical point. The loss of the specified business. Can you tell me what is the treatment of this loss? This part. Students, this is the most important part. Two things. This is the first one and this is the second one. One is the loss of such business is allowed. Loss of such business is allowed to be set off only against the profit from such business. Only against the profit from such business. Okay, so that is point number one. And what about point number two? Such loss can be carried forward for an indefinite period only if the return is filed within the due date of section 139 subsection 1. So if you want to carry forward the loss, because chances are very high that there may not be any specified business income for the purpose of the set off of the loss of the specified business. So what you will do then, you may try to carry forward the loss. And if you want to carry forward the loss, you have to only ensure that your return of income is filed within the due date of section 139(1). For all the students appearing for November 20 attempt, we all know the due date has been now 30th of November. The due date has been now 30th of November, and therefore if you file the return within the due date of 30th of November, then in that case the loss for your AY, which AY is applicable for November 20, AY 2021, in respect of the specified business, will be allowed to be carried forward for n number of years. Okay, so this is one thing, students, that you should always keep in mind in respect of this one. Fine. Priyanka is asking, yes sir, if 35 AD is not utilized, then depreciation is allowed. What does a SIC industrial unit mean? SIC means a loss making unit. Simply put, Priyanka, right now you just think of it, it is just nothing but a loss making unit. Okay, but right now there is no such implication. Just for the sake of understanding, it is a loss making unit set off only against the profit. Yes, students. So this is one thing which you should keep in mind. And on that note, let's quickly run through to some of the examination to your module based question which is there in 35 AD. Module question, students. Some of the very good questions are there. So we do page number 4.237. 4.237. So here Mr. A commenced the operation of business of setting up of a warehousing facility for storage of food grain, sugar and edible oil on 1st of April 2019. Now food grain we can say, sugar also we can say, but edible oil, is it the eligible business? Storage of edible oil, students, will it be eligible business? And the answer is no. So 35 AD deduction, students, 35 AD deduction in that case will not be allowed in respect of the edible oil business. In respect of the edible oil business, 35 AD deduction will not be allowed for the capital expenditure incurred for the warehousing of the edible oil products. So if you don't get deduction under 35 AD in respect of setting up of the plant or the building in of the edible oil product, then you will be getting the depreciation allowance. Yes, you will be getting a depreciation allowance because I'm not taking the deduction. I'm not taking a deduction. So if I'm not taking the deduction, I'll be getting a depreciation allowance. So this is one thing which is to be considered. But what about food grain? What about food grain and sugar? So for food grain and sugar, all the eligible capital expenditure, which is except land, goodwill and financial instrument, all the eligible capital expenditure which I have incurred for setting up the infrastructure of food grain and the sugar, for these the capital expenditure will qualify for a deduction under section 35 AD. Okay, so he has incurred the capital expenditure of 80 lakhs, 60 lakhs and 50 lakhs respectively on purchase of land and building during the period January 19 to March 2019, exclusively for the above business. Exclusively for what, students? For the above business. And capitalize the same in its books of accounts on 1st April 2019. So yes, if the capital expenditure is incurred before the commencement of business, then 35 AD says that the amount which is capitalized in the books, that amount will be allowed as deduction. In which year it will be allowed as deduction? In the year in which the business is commenced. In which year the business is commenced? In the previous year, 1920. The cost of land included in the above figure, students. So 50 lakhs. So out of 50 lakhs, students, in 80 lakhs, 50 lakhs is cost of land. So what is the eligible expenditure for the purpose of 3580 deduction? 30 lakhs. In the second case, out of 60 lakhs, 40 lakhs is the cost of land. So the eligible expenditure will be 20 lakhs, will be allowed as deduction. And in the last case, students, which is 50 lakhs, in the last case, students, which is 50 lakhs, the land cost is 30 lakhs. So 20 lakhs only in the last case for edible oil, 20 lakhs only will be eligible for what? Eligible for the depreciation allowance. Depreciation allowance, students. So just keep that in mind. During the previous year, so current previous year, after the business is commenced, he incurred again capital expenditure of 20 lakhs, 15 lakhs and 10 lakhs respectively for extension, reconstruction of the building purchased and used exclusively for the above business. So for this building, students, what will happen? 15 lakhs and 10 lakhs students, sorry, 20 lakhs and 15 lakhs students will be eligible for a 3580 deduction. 20 lakhs and 15 lakhs students will be eligible for the 3580 deduction, but the 10 lakhs part will enter into the block, and by entering into the block you will be eligible for the depreciation allowance. Compute the income under the head profit and gains of business and profession for AY 2021 and the loss to be carried forward. Assuming that Mr. A has fulfilled all the conditions specified for the claim of deduction to 3580, the profit from business of setting up a warehousing facility for storage of food grain, sugar and edible oil before claiming the deduction, how much is the profit? 16 lakhs, 14 lakhs and 31 lakhs. So before claiming the deduction of 3580 or depreciation of 32, as the case may be, this is the profit. Also assume in respect of expenditure incurred, the payment are made by the account pay check. Students, so let's quickly run through the solution. I think it's manageable, but still let's quickly do this. So profit from the business from setting up of the warehouses for storage of the edible oil before providing for depreciation under section 32. Students, before providing for the depreciation under section 32, this is 31 lakhs. Less what? The depreciation under section 32. So the depreciation under section 32, how much depreciation, students, you are going to claim? Because it is a building. So in that regard, in that context, students, the asset value is how much? First one I have already told you. Out of 50 lakhs, 30 lakhs represents the land. So 20 lakhs is the only eligible part, isn't it? And in the next case, 10 lakhs. So 10 and 20 and 10. The next case is 10 lakhs for the for this particular edible oil infrastructure. So from before the commencement of business, it is 20 lakhs. After the commencement of business, it is 10 lakhs. So in all, it is 30. On 30 lakhs, apply 10%, get the depreciation under section 32. So income to chargeable under the head PGBP is 28. Which business? Edible oil. Edible oil. Okay. What about the remaining? Food grain and sugar. So 16 lakhs and 14 lakhs are the amount. If you talk about the deduction excluding the land expenditure, then before the commencement of business, this is, students, before the commencement of business, which is 30 and 20, it is automatically going in loss, students. Here itself it is automatically going in loss. And after the business is commenced, it is 20 and 15. It is 20 and 15. So total deduction that you will take in food grain is 50, in sugar it is 35. Both of them now you are getting a loss. And the loss that you will be there, how much loss you will be getting? 34 and 21. This loss will be allowed to be carried forward. This loss will be allowed to be carried forward for unlimited period provided in this AY 2021. He has filed the return of income within the due date of section 139(1). Let's do this particular question, students. This question, I was talking about this illustration number 10. In the examination day, students, ensure to go through this illustration. Examination day also. This illustration on the examination day will be sufficient. Okay. Let's quickly run through this one, students. Mr. Suraj, a proprietor, commenced operation of the business of a new 3-star. Nishan, can we set off loss of specified business with the profit of non-specified business? Nishant, the answer is no. What Nishant is trying to say is this, that can we set off this 55 is the total loss of the specified business. He is suggesting that from this 28 profit, can I set off the loss of 55? And the answer is no. You cannot do that. Okay, but just consider this, students. Just consider this. If this would have been a 55, would have been a positive figure. 50. I'm just asking you this question and let me know your answer. 55 is a positive figure. Okay, and 28 is a negative figure. From edible business, it is a negative figure. So whether the loss of the non-specified business, can that be set off against the profit of the specified business? Whether the loss of the non-specified business, can that be set off against the profit of the specified business? Quickly, Chandana. Loss from the non-specified business, can that be set off against the profit of the specified business is my question. Roshan. And indeed, students, the answer is yes. Priyanka, Nishant, yes, indeed it can be set off. So students, it will be set off and nobody can stop it. It will be set off for sure. So nobody can stop this one, Trinath, and definitely we will set off this particular loss of 28 from the profit of 55. If I do a reverse, okay, but in this question nothing can be happen. But if I do a reverse, it can be done. Okay, Pawan Kumar. On that basis, students, coming back to this illustration 10. Mr. Suraj, a proprietor, commenced operations of the business of a new 3-star hotel in Madurai, Tamil Nadu on 1st of April 2019. He incurred capital expenditure of rupees 50 lakhs during the period January 2019 to March 2019 exclusively for the above business. So that means before the commencement of business, he has incurred a capital expenditure of 50 lakhs. So if it is capitalized in the book, so we will allow the deduction in the year in which the business has commenced, which is previous year 1920. Because it is a 3-star hotel, so eligible specified business. So okay. Further, during the 1920, in the current year also, students, he has incurred capital expenditure of 2 crores, but out of that 2 crores, 1.5 crores relates to land. So only 50 lakhs, students. 50 lakhs is what will be allowed as deduction in the current year. Okay, so the last year 50 lakhs, current year 50 lakhs. So in all, 1 crore deduction would be given in 35 AD. Compute the income under the head profit and gains from business and profession for the AY 2021, assuming that he has fulfilled all the conditions specified for the claim of deduction under section 35 AD and has not claimed any deduction under chapter 60. Fine. The profit of running this hotel before claiming, how much is the profit? 25 lakhs. I can easily see that there would be a 75 lakhs of loss. There is an outrightly 75 lakhs of loss. You will say, sir, from where you got this number of 75 lakhs? See, the total deduction of 35 AD is 1 crore. Before commencement 50 lakhs and after the commencement 50 lakhs, the eligible one. So your total deduction has become 1 crore, out of which your profit before 35 AD deduction is only how much? 25 lakhs. So I can easily see 75 lakhs is a loss from this specified business, assuming that he has also another existing business of running 4-star hotel in Coimbatore, students. In Coimbatore, which commenced operation 12 years back. The profit from which was how much? 120 lakhs. So now you tell me whether the loss of this 75 lakhs, can that be adjusted against the profit of this 120 lakhs? Can that be adjusted against the profit of this rupees 120 lakhs? Quickly students, this is the game as far as this question is concerned. Say fast. Chandana. And the answer is yes, it can be done. Perfect students. So this is what this particular question was all about. So 120 minus 75. Finally your answer is 45 lakhs would be your PGBP. 45 lakhs would be your final PGBP after setting off of the losses. After setting off of the losses, students, 45 lakhs would be your PGBP. Fine students. With this then we move to illustration number 11. Illustration number 11 students. In that Mr. Arnav is a proprietor having two units. Unit A carries on specified business of setting up and operating a warehousing facility for storage of sugar, and Unit B carries on non-specified business of operating a warehousing facility for storage of edible oil. So one is for, definitely one we can say it is eligible, and another is ineligible, non-specified business. First is the specified business. Even this one, students, mark this one for examination. 10 and 11 examination question. Examination you're going to refer. Unit A commenced operation on 1st of April 2018 and it claimed deduction of rupees 100 lakhs incurred on purchase of two buildings for rupees 50 lakhs each for operating a warehousing. For operating what, students? A warehousing facility for storage of sugar. Under section 35 AD for AY 1920. Okay. So it commenced its business in previous year 1819. Last year, previous year 1819, it commenced its specified business and it claimed a full deduction of 100 lakhs. 35 AD. Fine, for two buildings. However, in February 2020, current year, Unit A transferred one of its building to Unit B, students. It implies that the asset will then enter into the block. Examine the tax implication. So what will be the case? For one building 50 lakhs, you will take away the deduction because 8 years was the lock-in period, whereas you have transferred to the non-specified business within a period of 8 years. So therefore it will result into a deemed income. You will take away the deduction of 50 lakhs. But will you take the full deduction of 50 lakhs? No. If this assessee would not have taken the deduction of 35 AD, then he would have been eligible for depreciation. So accordingly, we will reduce the notional depreciation. From that deduction amount, and the balance amount will be considered as the deemed income, which will be chargeable. In which year it will be chargeable? In the year of default. What is the year of default? 1920. What is the year of default? 1920. Now, for how many years you are going to reduce the depreciation allowance? The notional depreciation that you will be reducing it. For how many years you are going to reduce it? 1 year. Why 1 year? Because 1 year was the only full year last year. Because in the current year, in between the default has happened. So obviously I cannot give, I told you also, in between you don't get depreciation. You get depreciation only on the last day of the previous year. So therefore in this case the default is only for 1 year. That is previous year 1819. In 1920, in between the default has happened. So 1 full year you will reduce the notional depreciation. 1 full year you will reduce the notional depreciation from the deduction allowed, and then the net amount would be the deemed income that will be chargeable under section 35 AD. So if you see the solution over here, students, since the capital asset in respect of which deduction of rupees 50 lakhs was claimed under section 35 AD has been transferred by Unit A carrying on specified business to Unit B carrying on non-specified business in the previous year 1920, the deeming provision under section 35 AD subsection 7B is attracted. You don't have to remember the sections and all. So what is a deemed provision? Deemed income, 50 lakhs is the amount of deduction on that one building that you have claimed, minus what? 1 year depreciation. At building rate is how much? 10%. 1 year depreciation. So this is 1 year depreciation. So in that case 5 lakhs. So your deemed income is 45 lakhs. And as I told you, the asset will now enter into the block. How much value at which it will enter into the block? It will enter into the block at 45 lakhs. It will enter into the block at rupees 45 lakhs. Students, in the scientific research, when the asset is taken away from the scientific research and it is used for the business purpose, then there is no deemed income. You don't take away the deduction of 35. There is no deemed income. You don't take away the deduction of 35. And that is the reason why the asset that enters into the block, is at nil value. Here, since you have taken away the deduction, therefore the asset will enter into the block at some value. What is the value? See for yourself. And this is quite logical. And now SSC will start claiming what? Start claiming the depreciation. Now the SSC will start claiming the depreciation. This is how it will be considered in this regard. Did you all got this one, students? Now very quickly, the other two small section. The small section wherein the deduction of capital expenditure. Didn't I told you about this one also? 35 CCA and 35 CCD. I have mentioned to all of you about this one. Which are those two sections? 35 CCC and 35 CCD. So students, here if you see, all these are not to be remembered. Simply put, herein, all expenses not being an expenditure in the nature of cost of land or building. Not being a, for what I am talking about, 35 CCC, which is about what? Agricultural Extension Project, 35 CCC. Agricultural Extension Project, 35 CCC. Directly students, here, in order to incentivize the business entities to provide better and effective agricultural extensive service, section 35 CCC provided a weighted deduction of a sum equal to 150% students of the expenditure incurred by an SSC on the notified agricultural extension project. Notified agricultural extension project. So in the examination they will give you expenditure towards notified expenditure debited to the profit and loss account. So if it is debited to the profit and loss account, they would have debited only 100, because as per the accounting they would have debited only what you are paying for. As per the accounting, you are debiting only what you are paying for. As far as the income tax under section 35 CCC, you are getting 150%, then extra 50% deduction you are supposed to reduce. Extra 50% deduction you are supposed to reduce. That is how you will do it as far as 35 CCC is concerned. Then after shows component of expenditure, herein any expenditure except for what? Except for land and building. So what about plant? Yes. So if I can say herein, for capital and for revenue. For revenue, any. For capital, primarily plant and furniture. Plant and furniture. So you just mark, students, if you have the module with you, this paragraph and this paragraph. That's it. Capital, plant and furniture. Revenue, any expenditure. Revenue, any expenditure. Any expenditure, students. Are you all through with the students now? All of you? With this now, last section, 35 CCD for the capital expenditure, the big deduction in this, the chart which I have prepared for all of you, the big deduction. Weighted deduction, again weighted deduction in respect of expenditure incurred by company. By company, students. Here it is only for company. On notified skill development project. So here students, as per the NMP, National Manufacturing Policy, has notified that there would be a skill development project. The government will provide how much? 150%, weighted average reduction of 150% of the expenditure, other than again land and building. Other than land and building. So again students, the expenditure would be herein. The expenses, again the same thing. Revenue, any. Capital would be other than land or building. Other than land or building. And on that expenditure, 150%. To whom? To a company. Capital other than land and building. Revenue would be any. That is how you should always keep it in mind. Just this much is sufficient. This much is sufficient, students. All of you are through with this one now? Amla, if the SSC started business for research, production and marketing of biofertilizer, does it come under section 3580? For biofertilizer, yes, all the fertilizer business, manufacturing, Amla, would be there. So that obviously they will do the first research, all that particular thing for fertilizing unit, and thereafter they will do the manufacturing. So any expenditure that you will incur, capital expenditure, eligible capital expenditure, you will get 3580 deduction, Amla. Did you all got this one, students? All of you through with this? Fine. So if you see herein, I have completed with you in this context. I have now completed with you all the big deduction of PGVP. All the big deduction of PGVP in your chart, which you already have prepared. In the chart that you already have prepared, this big deduction, students, I'm done with it. Now I will take a departure, and the departure you all know. 10AA and AMT, students, this is the first thing which I'll do it with you in my next session, and then I'll start with the small deduction. Okay, you just revise what we have done it today, because otherwise it will be a bit heavy for all of you. Just do ensure to revise the same very carefully. So what we will do would be, first do 10AA and AMT. In the module you have to tell me which particular module number it is there. Which module number it will be there, students. That module you need to just make a mention, because PGBP, I don't think it is there here. It may be there at 10AA, would be in some other particular this thing. So you have to keep that module ready for 10AA and for AMT. If somebody can tell me the page number, would be really great, so that students can keep that handy. And therefore we will revise now in the next session the AMT part and what, students, and the 10AA, and then we will, these small deductions are like very fast, it will go. So I think maybe 2 lectures more tomorrow and 1 more lecture, I should be done with your PGVP. Tomorrow and 1 more class, I should be done with your PGVP. Module 1, students are saying module 1, 10AA is in module 1. And what about AMT? So students, tomorrow first thing you will keep it in module 1. Module 1 and AMT. Chandana, this 3.27 is what? For 10AA. Okay, and AMT? This is 10AA. And AMT is no, I'm also now wanting for AMT. What is the page number? So that students be ready with this one tomorrow in the session. So tomorrow and 1 more lecture, which will deal with it and we'll finish it off, this particular segment. I will see if there are any practical problems which are there, which can be further be solved. That I will try to use it for my discussion. Anyone can quickly give me AMT? AMT would be towards like later part. Anyways, like module 3. This is module 3. AMT is module 3. Students. So you will have to keep handy module 1 and module 3. Page number, Priya, can you give me? In this case. For AMT students, it is 8.47. Fine, students. So the AMT 8.47 is a practical problem, and it starts from 8.12, maybe the concept. So we will discuss this particular aspect in our tomorrow's session, and then also start with the small deduction. Fine, students. So please revise up till now. Big deductions are through. Our headache is through, because this was a major part of a PGBP primary, and now we are into the small sections. But before the small section, the two concept of 10AA and AMT will finish it off, and then we'll proceed and wrap it up the remaining part very quickly, students. Yeah, concept is in 8.12. So the concept of AMT is in 8.12, and the practical problem, because practical problem is what I wanted to solve with all of you, so that you get a hold of the application part, because for sure AMT is very important for your inter CA, and we will deal with it tomorrow first up, so that you have a grip about how the things are there. Please revise of 35, the chart, the way I have prepared, unabsorbed depreciation, all these things, revise it carefully. And if you have to practice more, see the more practical problems on the same and freeze it once and for all. So students, tomorrow 10 o'clock, because I have a morning lecture, and that's the reason why it gets delayed a bit. So I'll just start at 10 o'clock, because today it got extended herein, and therefore I then have to had a call. So tomorrow 10 o'clock students will start in the morning. Okay, I think Om sir lectures are there in the morning. Om sir lecture is there in the morning. Any clue? ITSM, sorry, EISSM, whatever it is. Is it there in the morning? Not there. Okay, fine. Nevertheless, students. Okay, he hasn't resumed it. I'll just again take an update from him. Please, students, revise all the 35 AD, 35 big sections we have touched upon today, and all the default consequence. And I'll see you in the tomorrow's class. Thank you, students. Take care. Thank you. Economics. Trinad is saying economics. When economics is going to start, and at what time? Trinad. Economics timing? $7 a.m. 7 a.m. to 9 p.m. Sorry, 7 a.m. to 9 a.m. Economics tomorrow. 7 to 9. Fine. So I think 10 o'clock would be perfect for me to resume for the income tax. You have economics morning, and then I'll start with the income tax at 10 o'clock. Okay, students. See you then, students. Thank you all. See you then tomorrow with this important session.